Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. The world's richest man remaking Washington and America piece by piece. Elon Musk, special governmental employee. We'll hear from the New York Times' Teddy Schleifer.
Is this an example of what's going to happen at HHS or the Pentagon or whatnot, kind of those big ticket items to the federal government where Musk sends in a few 25-year-olds to kind of wreak havoc?
Disney's play in the content wars. Must-watch entertainment, but higher prices for the subscribers who remain? The company's chief financial officer, Hugh Johnston, joins us.
Right now, I think we've got pricing that's going to be in place probably for the next 12 months. I expect this is a product that will continue to increase in price gradually over the course of a number of years.
Plus, the rest of today's news that got us squawking: the markets, trade war, no trade war, round trip.
Almost landed in the same place we closed last week.
Never mind. China investigating Apple, Robinhood yanking Super Bowl betting, and can the U.S. own the Gaza Strip?
Obviously, this is a hotly contested piece of land, basically forever.
President Trump's shocking suggestion about the war-torn region.
It's the 51st state of Canada, it's Greenland, it's Panama, it's now Gaza.
It's Wednesday, February 5th, 2025. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Mike Santoli and Robert Frank. Joe and Andrew are off today. Gentlemen, welcome.
Good to be here.
Good to be here.
Looking good in the suits across the board here. All three major averages saw their first positive session in the last three. We'll continue to watch, see what's happening with some of these things, but obviously some of the pressures that we've seen with these technology shares overnight, adding pressure especially to the NASDAQ.
Alphabet for sure, AMD as well.
too,
And so, a little bit of a setback. You know, we actually did a round trip week to date. Monday, trade concerns, S&P down 0.75%. Yesterday, up 0.75%. Almost landed in the same place we closed last week.
Never mind.
But it's been this kind of, it's been this kind of low conviction, kind of apprehensive range that we've been in, waiting for the next headline with an undercurrent of decent earnings facing high expectations.
Volatility hasn't been too strong. 17, I think, was where the VIX was yesterday.
And which, if you think about it, imposing China tariffs of 10% on its own, if that had just happened in isolation without all the other stuff, you wonder whether the market would be sort of
more
consistent with it. But to think that the market is holding in there with the 10% tariffs on now, it's better than people expected, and so maybe there's a bit of a relief rally.
I think there's also the expectation when you saw Canada and Mexico, those tariffs go away before they even started. I think there's the expectation that there will be conversations with President Xi, and maybe that things will amp down, not amp up. But we'll see.
We'll see. Because today it doesn't seem like it.
Right.
And also, just hats off to Squawk Box and you Monday. Kevin Hassett, you and I had the same reaction to his interview. When I saw that interview, and hopefully when traders saw that interview, and they did, I just thought, wow, this may not happen. If I were able to trade stocks that morning after hearing that Kevin Hassett interview, I would have bought, because it was clear to him that those phone calls were coming up later that day. And he was already saying, well, there's already been progress.
He's given the politicians in Canada and Mexico an enormous amount of leverage, because the people of Canada, they don't want to have a drug war that they lose, and the people of Mexico don't either. And now, because President Trump has raised the level and made it clear that this is the number one policy issue for the United States this weekend, then all people in Canada and Mexico will support actions by those politicians to get ahead of the curve on the drug war. And so I think he's doing the politicians a favor.
From
so
Mexico,
that was a very different message from what we'd been hearing over the weekend from President Trump and others.
It was a different conversation than I expected to be having with him that morning. Kevin obviously is an economic advisor, and you would expect that he would have been talking the economics tariffs, and that was not what he wanted to talk about.
Yeah, we've talked about this, but the administration needed the emergency powers, and they had to say there was an emergency about fentanyl to actually do anything.
Yeah.
And also,
but Kevin didn't have to.
This president, well, you kind of do if the lawyers are like, hey, this is what it's about. But I also think that, yes, it's relief that it's not about just pure aggression. Let's get the maximum tariffs out there for sure and let them stick. Yeah. But you're preserving the leverage. It's always 30 days forward. It's always there.
Yeah.
And so I don't think that that's necessarily an overwhelming negative. It's not the big swing factor for the market. But if you're an investor and a trader, you can never be comfortable that it's been set aside.
I guess
for
the
good.
question is, absent the trade issues right now, what would the market be doing based on earnings and based on yields right now?
It's a good question. I mean, I have a feeling it might be a little bit freer to move. And I think earnings expectations are high enough, though, that I still think you'd see all this back and forth chop. You mentioned the volatility index at 17. That's low-ish.
It doesn't feel like
it's all this movement under the surface that's kind of canceling itself out. And at the index level, the S&P 500 closed the day after the election, 59.29. It's been at the high up 3% from there, at the low down 3% from there. And we're kind of right in that zone again. So
we're basically where we were right after the election.
It's a dog on a lead. It's a lot of movement, but it's not getting anywhere.
Shares of Apple are sliding this morning after that Bloomberg report that showed Chinese regulators are considering whether to open a formal probe into its App Store fees and policies. The report said China's market regulator is considering an investigation into Apple's cut of up to 30% for in-app spending, as well as blocking third-party payment systems and other app stores. Apple and China's Commerce Ministry were not immediately available for comment when they were contacted by CNBC overnight. But guys, this is really interesting. Not that this whole investigation of the App Store is new. We've seen that from regulators around the globe. The timing is very unique, and it's also a way for China to do this without affecting the many, many Chinese jobs that rely on Apple manufacturing.
Well, that's the delicate balance, right? I mean, they haven't gone hard against Apple in the past, given the number of jobs there. And I think this is just sort of a shot across the bow. To America, you're going to come after us with tariffs. We've got a lot of corporations, your corporations, that make a lot of money somehow from whether it's the Chinese consumer or manufacturing here, and we have a lot of leverage.
And that China's not in a mood to just rush to a point of putting some concessions on paper and saying, let's make this go away, the 10% tariff. So it's a
going
little
to be
bit
a different
of back and forth.
negotiation than it was with both Canada and Mexico.
Ladies and gentlemen, the President of the United States and the Prime Minister of the State of Israel.
That's a lot of press. Congratulations. You bring them out. You really bring them out.
Meanwhile, President Trump proposing a new Middle East peace plan involving taking long-term control of Gaza and rebuilding it to the Riviera of the Middle East. Eamon Javers joins us now with more. Eamon.
Yeah, good morning, Robert. President Trump made a surprising suggestion last night during a press conference with Israeli Prime Minister Benjamin Netanyahu. The United States, he said, should take over the war-torn Gaza Strip, where Israel has engaged in a bloody war with Hamas for more than a year, and redevelop it into something like a seaside resort. Here's what he said.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
Now, Trump said he sees the area as the Riviera of the Middle East and that developing it would create thousands of jobs. He also said American troops could be involved to control the area if necessary. Standing beside Trump, Netanyahu confirmed that Israel and the U.S. are in talks about the idea and said, I think it's something that could change history. The Gaza Strip includes 25 miles of Mediterranean coastline and a territory that is one of the most densely populated in the world, home to an estimated 2 million Palestinians. Trump's proposal seemed a sharp departure from his tone on the campaign trail, which was sharply critical of U.S. military and diplomatic involvement in the Middle East. But members of the Trump family, guys, they've eyed the real estate potential of the area before. Trump's son-in-law, Jared Kushner, said last year that Gaza's waterfront property could be very valuable. And we got a reaction from Hamas leaders overnight as well, guys, saying that Trump's comments represent confusion about Palestine, and they say that this is simply not something that's going to work. Back over to you.
Yeah, Eamon, what would legally, how would this work? Was there a discussion, I know the details were scarce here, but of buying it, of just taking it over? I mean, what would be the mechanism through which the U.S. gains control? Or was there any discussion of that?
I mean, there's no underlying detail here, Robert. I mean, this is the president throwing out an idea there. I mean, you could see from, just the clip that we just played, he was reading these comments off of a prepared script that he had in front of him. So clearly there's some thinking that's gone into this, this wasn't just totally off the cuff. But we didn't get any background details from the White House in terms of exactly how this would work. What the president said is the U.S. would simply take over Gaza, presumably because the Israeli military has cleared out resistance and bombed out enormous amounts of territory there. The question is, who would legally run that? Would that be sanctioned by the UN? And then what would Hamas say about that, right? I mean, obviously, this is a hotly contested piece of land, has been for, basically forever. The amount of resistance that we would get there would be epic. The reaction on Capitol Hill overnight, people were sort of agog over this, looking at it and saying, how would this even work? This seems like a non-starter. But the president is a real estate developer, and he sees things in those terms.
Yeah, it's the 51st state of Canada, it's Greenland, it's Panama, it's now Gaza. He likes land. He likes buying and owning more land.
Yeah, it's interesting, though. I mean, this is an isolationist president, right, who ran on the idea of getting out of the Middle East, not getting the U.S. involved in forever wars. And then here he's floating the idea of American troops in Gaza, which is, one of the biggest flashpoints on planet Earth. And you can imagine, if Baghdad was difficult, Gaza would be, X percentage more difficult than that in terms of a military campaign. It's at odds with sort of his whole approach on the campaign trail as well.
Yeah, and it's at odds with, you would think, even the conversations he has had with Saudi Arabia. MBS has been a close ally in the past of the Trump administration. Just a little strange to think of, and I've been trying to go around and round, figure out what they could possibly mean by this. In your most generous assessment of it, you could try and think of a Marshall Plan, but this is not that, because he has said he would remove the Palestinians and go in and actually potentially send U.S. troops in. So it's very different from that perspective. Obviously, there's something that needs to be done in Gaza post the Israeli invasion and the damage that's been done there. But this is very different from the Marshall Plan after World War II.
Yeah, I mean, the immediate criticism you heard over the night last night was that, this is ethnic cleansing, right? I mean, talking about removing the entire population of Palestinians and replacing them basically with tourists at a Mediterranean resort. That's not a great look. The president didn't say, though, that he wanted to remove all the Palestinians. In the plan that he kind of teased last night, he said that world people, meaning people from everywhere, would live in Gaza once it's been redeveloped, along with Palestinians. But he also seems to envision removal of a large number of Palestinians. Remember, there's 2 million people crammed into a very small area there. He seems to envision removing a large percentage of that population to other Arab countries throughout the region. Those countries have signaled that they don't want to take those populations. So it's not clear, where those people would go. Trump simply making the argument that Gaza is bombed out and destroyed and really uninhabitable right now, and the Palestinians should, he said, want to go somewhere else. I think that's going to be a question for the Palestinians, right? I mean, ask them where they want to go and what they want to do. But clearly, if you're going to turn this into a Middle Eastern, Mediterranean
I don't think they want to go anywhere. That's been the point.
The Palestinians might want to own it, right? I mean, what's their equity stake in this New Deal?
Yeah, Eamon, so complicated. Not going to be an easy real estate deal, even for Trump. Eamon, thanks so much for the update. We appreciate it.
Robinhood Markets is pulling back on its plan to offer Super Bowl betting contracts. The company said that the Commodity Futures Trading Commission raised concerns that those contracts might be illegal and basically directed them to stop offering them. Robinhood's general counsel said that they believed they were in compliance with all applicable regulations, but they did agree to the CFTC's request. Robinhood launched the betting options on Monday through a partnership with Kalshi, which is the online prediction market. Kalshi is barred from listing contracts that involve gaming and that are against public interest. But the definition of gaming isn't spelled out in the law. Kalshi does offer one contract on which team will win, But other contracts are for things like which companies will run ads during the big game and what songs will be played at the halftime show. Robinhood said that users who placed bets before it removed the options will have the choice between either closing out those positions or keeping them through resolution of this situation. Robinhood went on to say that they thought that they had signaled very clearly to the CFTC what was coming. They were surprised by this. And I think it was something like 1% of their clients that this had been rolled out to before it was pulled back.
Robinhood has expressed a willingness to explore actual sports betting, which of course is not legal in every state. You have to keep that in mind. Look, they're in charge of what they think their brand is. And they think their brand is whatever our customers want to transact in, we have the interface for it. In the meantime, they kind of brag every earnings period of saying, oh, we got dribs and drabs of assets from Fidelity. We're actually going to be a long-term return. Like, I'm not sure you can really reconcile those things long-term because betting is a zero-sum game. Investing is a positive-sum game.
And they were trying to distance themselves from the accusation that they were a gambling site with confetti and all this. No, we're now for serious investors. So I think this probably is a positive move that they're moving away from the gambling part of it.
We'll get a workaround. We'll see.
Cheese will be next.
Coming up, Disney CFO Hugh Johnston says his company has appeal to both the cord cutters and the cable loyalists.
In a sense, we've really created a perfect hedge. If consumers want to stay in linear, we're perfectly happy with that. If they want to move over to the streaming side of how they receive their programming, we're happy if they move.
The numbers game in the House of Mouse on Squawk Pod right after this. This is Squawk Pod.
You are watching Squawk Box right here on CNBC. I'm Becky Quick along with Mike Santoli and Robert Frank. Disney out with its earnings just in the last 10 or 15 minutes. Been taking a look at that, and the stock is indicated higher this morning after the release of those numbers. The entertainment giant reporting better than expected earnings and revenue. Actually, it looks like it's indicated down by about 0.6%. I've seen it up by as much as 2.5% over the course of the morning. Joining us right now, first on CNBC, is Disney CFO Hugh Johnston. And Hugh, good morning. Always great to see you, but especially on an earnings morning. So thanks for being here today.
Yeah, happy to be here with you, Becky. Obviously, feel great about the quarter, well in excess of expectations, and most importantly, broad-based growth. The entertainment business came in very strongly on the back of Moana 2 as well as Mufasa. And the experiences business performed very well in excess of where we expected, despite the fact that we were dealing with hurricanes and the startup cost on a ship. The business actually, ex those costs, grew 6% in the quarter, which was a little better than we expected. So we feel like we're off to a great start to the year.
Yeah, and I will tell you right now, Disney shares are up by about 1%. They have been bouncing around a bit this morning. For anybody who hasn't seen the numbers yet, they came in at $1.76 a share. That's up from the $1.22 a year ago and compares to $1.45 that the street was looking for this most current quarter. Let's start with the experiences, Hugh, because there had been some questions about whether the park was going to feel pressure from either consumer spending or from inflationary cost. You point out that experiences, which includes the parks and cruises, did have to deal with some hurricane activity, and that cut into things. But where did things come down just in terms of overall? I know you'd been looking for that division to grow by 6 to 8% for the operating income for the fiscal year.
Yeah, that's exactly right. So it came in, as I said, a bit ahead of our expectations. We knew that we were going to see a build across the year, driven by some timing on some factors in the previous year. And in fact, the consumer is a bit stronger than we would have expected. Broadly with the consumer these days, I think what we're seeing is consumers are just very value focused. And if you deliver value to them, they're willing to pay the price for it. And obviously a Disney vacation is great value. So experiences came in well in the domestic parks. Internationally, with Paris, grew quite strongly. And the cruise ships continue to perform well. So really across the board in experiences, we saw more strength from the consumer than frankly we had expected.
I think the other surprise was, even though you raised prices for your streaming costs when it came to Disney Plus, ESPN Plus, Hulu, you didn't see as many consumers drop the service as you had expected internally. What happened there?
Yeah, same basic story. You know, it's funny. Disney Plus just continues to be a stronger and stronger service. The bundle with Hulu is working quite well. As you know, in December, we added the ESPN tile, and that's off to a great start. And obviously, ESPN Flagship, which will be a really terrific ESPN digital product, will be coming sometime early this fall. So I think consumers are looking at it and saying, this is really a platform that we need to have in our household. It's kind of a must-have service. So despite the pricing, we think we're delivering enough value there as well, as consumers want to stick with us.
Although, Hugh, the guidance is for perhaps a downtick in subs for the current quarter because of that increase in expected churn, I gather. And just more broadly on the streaming strategy, do you think that there's kind of the potential for consumer confusion? What's your vision for down the road, having the multiple services where some of them are all bundled and yet they also can operate independently? Where's that headed?
Yeah, I think you're going to see us make the product more and more focused over time. I think that your observation is very much a fair one, that there oftentimes are so many options, it does lead to a bit of consumer confusion. So the direction of travel we're heading in is, how do we make this as easy and as simple as possible for consumers, particularly to bundle, because we think that's where the best value is. And that's where they can capture the broadest array of entertainment that we offer. The way to think about Disney Plus in the future, I think more than anything, is it's going to be the portal into all things Disney, and something you're really going to want to turn on 24 hours a day, 7 days a week, when you're not watching CNBC, of course. But beyond that, we certainly feel like it delivers entertainment, it delivers news, it delivers sports, and in the future may deliver many other things as well. So I think you're right. We're going to be simplifying the service to just make it easier for consumers and make them want to do the broadest possible bundle.
Simplify meaning they're all going to get combined, and it's no longer a bundle. It's just
Yeah, that's it, Becky. I think you'll see less rather than more options in that regard, because that's what consumers are indicating to us they want. They want less confusion.
And where will the pricing be for something like that?
Well, right now, I think we've got pricing that's going to be in place probably for the next 12 months. I expect this as a product that will continue to increase in price gradually over the course of a number of years. And then obviously ESPN Flagship, which is a much bigger and broader product, will bring its own separate pricing attached to it. But I think you'll see pricing steadily increase, not dramatically increase.
You know, Hugh, the profit line for Disney Plus, Hulu, and ESPN was $293 million. That was up from a loss of $138 million a year ago. And it's more than $100 million greater than the profit that the street was expecting. So what happened? What were the levers that worked there?
Well, it was a couple of things. And if you think about where we were just a few short years ago when we were investing in building the business, the business was losing several $1 billion a year. Now this year, our expectation is for it to make more than $1 billion. It's a combination of we've made the product better in terms of recommendation engines and all of those things that make it easier to use. In addition to that, because we're adding such terrific content, both on the movie side with the aforementioned movies, as well as terrific content like Shogun and Abbott Elementary and High Potential, it's a more compelling proposition. So the churn is going down and the stickiness is a little bit higher than what we had expected. And then on top of that, we found the right balance in terms of the level of investment that we need to put into content. So from that perspective, we have costs, I think, in a better situation. So you add all of that up, it's turned from a business where we need to invest in to a business where we're going to continue to invest, but at the same time, we'll continue to drive the margins that we'd indicated earlier and grow subs simultaneously.
How do you know that you continue to get the content right? I mean, it's great when the content that you're producing are hits and that there are things that really want to drive people in, but the way that subscribers can drop with these things, if you don't have a constant stream of new and exciting programming, I mean, that's the issue. How do you know you've conquered that formula? Yeah, I think it's actually one of the advantages, so to speak, that the Walt Disney Company has is we create so much of our own content relative to perhaps some of our competitors. And that's based on all of the investments that we've made over the years in IP, like Pixar and Lucasfilms and obviously the Disney franchises. So by virtue of us creating 4 or 5 big tentpole movies a year, and then on top of that, smaller movies, by virtue of the fact that we're connected to ABC, so
we actually can produce programming that both runs on linear and runs on streaming. We actually, I think, have a better feel for what we need in terms of content that perhaps someone might be who has to license more of their content.
And Hugh, you just mentioned linear, that was down 7% in the quarter. We've seen Discovery, Warner Discovery looking at maybe sort of splitting off the cable networks. Obviously, we have SpinCo with our parent company, Comcast. What are your thoughts right now? What are the company's thoughts for the linear side, and what structures might work for the linear business?
Yeah, great question. We're very happy with where we are right now. And I think part of the reason we're happy with it is because we do have this integration between what we're doing on the streaming side and what we're doing on the linear side. In a sense, we've really created a perfect hedge. If consumers want to stay in linear, we're perfectly happy with that. If they want to move over to the streaming side of how they receive their programming, because of the incremental margins per subscriber on streaming are quite high. It's almost like a software business in a lot of ways. We're happy if they move. So we've actually kind of positioned ourselves quite well, and we think that integration works well for us. Now, I know those other companies are following different strategies, and those are probably things that work for them. But given the size of our streaming business, we actually think what we've built right now is well hedged and therefore gives us the best outcome.
Hugh, thank you for joining us this morning. It's really good to see you.
Great to be with you guys.
Hugh Johnston.
Next on Squawk Pod, the real scope of Elon Musk's influence in the U.S. government. New York Times reporter Teddy Schleifer on the latest news that Musk currently has read-only access to the Treasury's payment systems.
The Musk team and the Trump administration has not been honest about, or has not been transparent about what exactly has been going on here. There have been some conflicting reporting about whether or not the read-only thing is true, whether it's always been true.
You're listening to Squawk Pod from CNBC. Today with Becky Quick, Robert Frank, and Mike Santoli. Here's Robert.
Elon Musk swiftly trying to overhaul multiple government agencies, sidelining career officials in order to advance an aggressive cost-cutting agenda. Earlier this week, our next guest co-wrote an article covering what the New York Times dubbed Musk's, quote, incursion into the federal government. Speaking about Musk, the piece says, quote, at one point after another, Trump officials have generally relented rather than try to slow him down. Some hope Congress would choose to reassert itself. So far, they are not. Joining us now to talk about Musk's approach, his power, and concerns surrounding his New York Times reporter, Teddy Schleifer. Teddy, so great to see you. And again, terrific work following the money here. It was interesting. There's been a lot of hyperbole on all sides of this, especially around USAID. And I, for one, was interested to learn that we spent $20 million on some Iraq Sesame Street show, $2 million on a Moroccan pottery class. It kind of brings me back to the mid-1980s. You wouldn't remember it, but back then there was the $640 toilet seat and the $430 hammer at Pentagon. There's always waste. If you look at AID as a whole, it's $40 billion. It's a lot of money, but it's less than 1% of the government. Do you think we're making too much of this agency, or do you think this sort of signals a bigger plan ahead for other agencies and cuts for Musk?
Yeah, a great question is, why does Elon Musk care so much about this agency? Elon is in some ways a victim of his own platform. I mean, he sees things on Twitter or on X and responds. And to some extent, it's very humanizing. And Elon has been ingesting a lot of content from right-wing media that suggests that USAID is, the rotten core of American society, or at least of American foreign policy. And that's why he's focusing so much on this, which is, $40 billion, but there are a lot of agencies that have a lot more zeros attached to that. And the question you're getting at is, does this presage sort of the playbook, right? Is this an example of what's going to happen at HHS or the Pentagon or whatnot, kind of those big ticket items to the federal government, where Musk sends in a few 25-year-olds to kind of wreak havoc?
Yeah, and we've talked a lot about what legal right he has to do this, and a lot of differences. Even we had some members of Congress on today saying, well, he's not actually cutting anything. He's just making suggestions and highlighting things. What's your sense? And Musk himself has said on X that, we fed USAID into the wood chipper over the weekend. Yep. What's your sense of whether he is cutting, whether he's just making suggestions? The president of USAID is a little bit different because it's sort of an executive order. But is he actually making cuts, or is this just being overblown?
I mean, if it's being overblown, it's being overblown by Elon Musk, to be clear, not by the media.
Yeah.
There is some difference here, I think, between Trump and Elon on this question, as you'd guess. Donald Trump is the democratically elected president of the United States, and Elon Musk, Trump has described as sort of his enforcer, the person who's carrying out his executive orders on his behalf to make sure that the Trump government is following what the Trump president or President Trump wants him to do. Elon is portraying himself as an executive, right? And that raises all the questions about presidential power that have been debated for decades. He's not the president, right? So there would be ample questions of whether Trump himself has the power to do these things, and then you kind of put in a surrogate, a political appointee and someone who Donald Trump has the right to name to the head of this body, but it raises, a host of other legal questions. So I don't know the answer to the legality of whether or not what Trump is doing is allowed, and we certainly don't know the answer to whether or not Elon Musk can do it.
Yeah, and it was interesting when Treasury Secretary Besson put out the statement yesterday saying Elon Musk and DOGE doesn't control the Treasury database, but that doesn't mean that they don't have it. And what's your sense of what they've done with that data? What kind of legal resource is this going to go in the courts? What do you think of these lawsuits against it? And do you think that data has actually been downloaded onto a private server, or do we even know?
Well, I think the most interesting word in that letter from Scott Besson or from Treasury, not from Scott Besson himself last night, was the word currently. They said there that currently only Treasury officials have access or have read-only access to the payment system. I don't know. I have no idea if that means anything, but it certainly stood out to me. It made me wonder, has that always been the case over the last week? And they've said, we don't have no evidence to say that Elon Musk has downloaded that information to a private server. Certainly, there's a ton of speculation and conspiracy theorying and hypothesizing. But I think this is all coming into a vacuum because the Musk team and the Trump administration has not been honest about, or has not been transparent about what exactly has been going on here. There have been some conflicting reporting about whether or not the read-only thing is true, whether it's always been true. We report here at the Times that the White House has said on record, which I think is important in this day and age, that it is read-only. And they've said that it is DOGE officials. This is a guy named Tom Krause, who's the Silicon Valley CEO, who is the Treasury, one of the lead DOGE people to Treasury, who has that power. But certainly, I think we're just getting started here on answering these questions because, obviously, certainly a lot of market investors want to know whether or not, the Elon team has the ability to stop a dollar from going out of the U.S. government.
Yeah, and it sounds like his next target is the IRS, which also is under Treasury. He put out a poll on X saying, should we audit the IRS? Given the sensitivity of the Republicans toward what they said the Democrats did with IRS data, leaking all the billionaire information. What's your sense of whether he could get access to IRS data? And what's the chatter in D.C. right now about what he wants to do with the IRS?
Sure. This is the guy who said he's made the largest tax payment in history. Suddenly, just seems to be interested in the IRS. We've reported here at the Times that the Elon team for almost the entire transition has been thinking very, very creatively or very interested, let's put it that way, in the IRS infrastructure. There's a guy, an Elon advisor named Barish Akis, who had met with IRS officials during the transition and was asking a lot of pointed questions about the way it works. There certainly are a lot of experts on all sides who think that the IRS infrastructure is very outdated, and frankly, auditing the IRS.
Yeah, he should help them with their technology. That's what he should be doing. He should help them with better technology, more efficiency, and more enforcement and more collection.
Look, auditing the IRS has been something, as you know, that has been a talking point in conservative policy for a long time. And frankly, I think a lot of presidents would look into that if you were a Republican. But I think the Elon involvement is interesting to me as a reporter who covers him, is because this is somebody who has enormously biased opinions about taxes. I'm not saying biased in a negative way, but is there anybody in America who would care more about some of the specifics about, wealth taxes or carried interest or, tax credits for companies like Tesla? The conflicts of interest here are so obvious, it's almost not even worth talking about. And look, Musk can very well do a lot of things you're talking about and modernize the IRS infrastructure, and maybe Democrats and Republicans would applaud that. I don't think the media should be reflexively anti-DOGE, or anti-cost savings. I just, the conflicts here are obvious.
Teddy, we got to run. Thank you so much. Great articles, terrific, great coverage. We appreciate it.
You bet.
New this hour, the United States Postal Service says it will continue accepting all international inbound mail, including packages from China and Hong Kong. It had announced yesterday that it's going to stop accepting those packages because of President Trump's executive order targeting exemption on goods less than $800. The Postal Service now saying it's going to work with Customs Border Protection to implement efficient collection mechanism for new China tariffs to ensure the least disruption for package delivery. This was a big deal because you can imagine that Postal Service just stopped anything out of China and Hong Kong. We're not going to deliver it.
I was wondering how much of my stuff wasn't going to get here. I think this is also bureaucratic confusion as to how to interpret the executive orders. I don't think this was an intentional and then said, oh, never mind, we can't do that, China's mad. I don't think that's the case. I think this is anybody you talk to in any of these government agencies are having a hard time trying to figure out how to interpret some of this, and there's going to be some bumps along the way. So I think that's just an example of this.
And that is Squawk Pod for today. Thank you for listening. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Our thanks to Robert and Mike for today. You can tune in weekday mornings on CNBC at 6 Eastern, or get the smartest takes and analysis from our TV show right into your ears when you follow Squawk Pod, wherever you get your podcasts. Hit that follow button wherever you're listening right now. That's it. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.